Welcome to another Disruptive Discourse video. A lot has happened since I last posted a video, and I'm afraid much of that delay has been outside of my control, but fear not, I'm working very hard in the background to try and get some consistency in place, and hopefully this is something that you would notice in future videos. With that out of the way, a lot has happened in this last few days, from the Wall Street bets phenomena to Tesla adding Bitcoin to its balance sheet. What a difference a few days make. Having said all of that, let's get back to reviewing disruptive companies. In this video, I'll be rating 4 new stocks that Ark Invest purchased in the week of January the 4th to 8th, and 1 from the week of January 11th to 15th. I'll be rating them according to their future growth potential, with the least growth potential rated number 5 and the highest growth potential rated at number 1. But in alphabetical order, the 5 stocks are 10x Genomics, Bristol Squibb, Kratos Defense and Security Solution, Rockwell Automation, and Skillz. But first, before we delve into these videos, I think it's important that I stress that I'm not a financial advisor, and these videos are really just made for entertainment purposes and also as educational videos to help you just understand what these companies are about. But please do not rely on these as your sole source of research, which I'm sure you're not. Also, please feel free to use the timestamps in the description box below to navigate to the parts of the video you wish to watch, or otherwise feel free to watch the whole thing. At number 5 is Rockwell Automation, ticker symbol NASDAQ ROK. The CEO is Blake Murray. Ark Invest purchased $5.1 million worth of shares in the company on 8th of January. Rockwell Automation Inc. was founded in 1903 and is headquartered in Milwaukee, Wisconsin. It is one of the top industrial automation companies across the globe. The company primarily serves a range of industries which includes the automotive, semiconductor industries, warehousing and logistics, food and beverage, and life sciences, amongst others. Automation is transforming our industries worldwide, reducing and in some circumstances cutting out completely the need for human-dependent manufacturing, thereby improving productivity and consistency, as in the case study of the brewery company and car manufacturing company just been shown. As for Rockwell's revenue, in 2017, the company generated $6.31 billion, and there was a negligible increase in that revenue to $6.33 billion in 2020. This gives it a compound annual growth rate of 0.11%. Again, this speaks to the maturity of the company's ability to generate new sources of revenue. So clearly, this is not really a growth company. It has a PE ratio of 22, which is lower than the S&P 500 average of 39. So the company is certainly profitable, and it is cheap in terms of its valuation when compared to the average company in the S&P 500. Then add to that the fact that the company is working at the cutting edge of innovation. I'm sure that we'll be seeing more growth from the company in the future. It's just a question of whether this will be growing at a double-digit rate or not. And that is why I have this company at number 5 on this list. At number 4 is Kratos Defense and Security Solutions, ticker symbol NASDAQ KTOS. The CEO is Eric DeMarco. Ark Invest purchased $4.07 million worth of the shares on January the 4th and the 5th. Kratos Defense and Security Solutions is a company that specializes in defense-based technologies and mainly serves government agencies such as the US Department of Defense, intelligence agencies, and other national and international governmental agencies. One of the key products that it manufactures and sells are unmanned systems, which ranges from autonomous machinery and components to autonomous land and sea vehicles, as well as aircraft. But they do much more than that, like the advanced simulation you can see for the training of military personnel. This is a company that has been around since the early 1980s, but clearly is at the cutting edge of technology and innovation, which is why it is an Ark Invest portfolio. As for its revenue, it generated $541.9 million in 2016, and in 2019 this grew to a modest $717.5 million, giving it a compound annual growth rate of 9.81%. I think it is fair to say that this is not a growth stock. Its price to earnings ratio is 913 and it has a price to sales ratio of about 5. On both of those metrics, the stock would appear to be rather expensive, especially for a mature non-growth stock. But nevertheless, I still feel that this is an area which would see explosive growth in the future, especially with autonomous unmanned vehicles and the technologies that go into them to improve them. So watch this space, as I think that there is always a likelihood of a double-digit growth for this area. And it is for that reason that I rate this stock at number 4. At number 3 is Bristol Myers Squibb, ticker symbol NYSEBMY. The CEO is Giovanni Carforio. Ark Invest purchased $122.8 million worth of the stock on January 11, 12, and 14. Bristol Myers Squibb is one of the largest biopharmaceutical companies in the world by revenue. It was founded in 1858 and has grown to be one of the leading global pharmaceutical companies today. It is headquartered in New York and has approximately 28,000 employees worldwide. Bristol Myers Squibb's main focus is addressing serious diseases and areas of significant unmet medical need. Its research and development efforts concentrate on 6 core therapeutic areas, which are cardiovascular, immunoscience, metabolics, neuroscience, oncology, and virology. The company has an impressive pipeline of drugs currently on the market, which cover solid tumor cancers, such as their drugs Opdivo and Yervoy, and for cardiovascular diseases they have their drug, which is called Eliquis, and for their immune-related diseases they have their drugs called Erinicia and Zeposia. They've also got some significant drugs in the blood-related diseases segment, the main one being Revlimid. The company's top 8 drugs generated $39.6 billion of the revenue for the company last year alone, which amounts to over 90% of the company's annual revenue, just from 8 drugs. That is really impressive. Now, its revenue has also seen a steady growth over time. It went from $20.78 billion in 2017 to $42.52 billion in 2020, giving it a compound annual growth rate of 26.95%. Medicine in general is entering into a new phase of growth with new drug discoveries, and all of the big companies are set to play a major role in this, and Bristol Myers Squibb is no exception, hence why Cathie Wood's Ark Invest have been investing heavily in this area. At number 2 is 10x Genomics, ticker symbol NASDAQ TXG. The CEO is Serge Saxonov. Ark Invest purchased $124.4 million worth of the stock on the 6th to the 8th of January. 10x Genomics is an up-and-coming biotech company that specializes in manufacturing and selling instruments, consumables, and software toolkits that help healthcare experts in the life sciences sector to analyze genetic data based on a single-cell approach to genetic data analytics. The idea behind the company is that they focus more on granular analysis of each cell to give a much better picture and insight into genetic data analytics. Their toolkits help to profile thousands of individual cells simultaneously, and the advantage of this is that it gives a greater insight into each cell's identity, diversity, and lineage. Also, by studying the gene expression within individual tissues, they're able to better understand the function and spatial relationships of these complex gene expressions. They can profile hundreds to tens of thousands of cells per sample, and the whole process from sample to sequencing ready library can take as little as 2 days. I think it's safe to say that their products are certainly in demand in the genomics space, and this is borne out in their revenue. Their revenue grew from $71.08 million in 2017 to $245.89 million in 2019, which gives it a compound annual growth rate of 85.99%. Furthermore, their current addressable market is set to grow from $15 billion to almost $60 billion. So there is definitely a lot of scope for growth in the foreseeable future, and that is why I've got this stock at number 2. Taking the number 1 spot is Skillz, ticker symbol NYSESKLZ. The CEO is Andrew Paradise. Ark Invest purchased $9.2 million worth of the stock on January 4 and 5. Skillz Inc. operates a mobile games platform that connects players worldwide. Its platform hosts casual esports tournaments. The company was founded in 2012 and is headquartered in San Francisco, California. The Skillz platform allows players to play against each other in various types of games, from board games to card games, as well as mobile games and many, many more. But what sets it apart from other gaming platforms is that it offers rewards to gamers based on their skill. Therefore, players with very high skills get rewarded highly. Also, it allows players to play against each other for money. Now, just to break this down a little bit further, it costs 60 cents for a head-to-head game, which means both players contribute $1.20 per game. Out of that amount, $1.04 goes towards the developer revenue and the prize for gamers, which means that Skillz keeps the remaining 16 cents per every single game played on its platform, as far as the monetized versions of the games are concerned. And just to put this into perspective, the gross merchandise value, which is the number of revenue generated on the platform by all of the games placed by developers, that amount grew from $120 million in 2017 to $886 million in 2019. That is a compound annual growth rate of 171.72%. As for its revenue, that grew from $17 million to $120 million during the same period, giving it a compound annual growth rate of 165.68%. The company is also estimating that its revenue will further grow to $555 million by 2022. If that estimate turns out to be correct, then from 2019 to 2022, the company would have grown its revenue by a compound annual growth rate of 66.61%, which is still a very impressive rate of growth. I've personally tried the app and my god, it is extremely addictive, not for the faint-hearted. Otherwise, this thing is very likely to derail any level of discipline you set yourself, and that is why I rate this as number 1. Well, I hope you found some value in today's video, and thanks as always for tuning into the channel. And if you're new, don't forget to subscribe. Thanks once again, and I'll see you in the next video.